Hey, it's Mack with PriceActionTradingSystem.com. It's Monday. It's August 31st. It'll be the last day of August. We'll be starting September 1st is here tomorrow. Hard to believe that the fall's already here, but we're that time of year, and generally, sometimes this is some of the best um, rally times of the year. So we'll just have to see. Volatility's still a little high. The bars are still really large. Um, the volume is not quite as extreme as it was at one time. It's still fairly high volume. You can see the number of bars here. Um, but it slowed down some considered compared to what it was before. So um, today was, for all intents and purposes, a range day. We spent most of the day with prices between about 1962 or so and 1976, 77 area. I mean, that's a 14, 15 point range, so it's a fairly large range, large enough so that there's trends up and down. We had a trend up, trend down, trend up, and then we spent the rest of the day coming down. We actually failed out the upper side and spent the rest of the day. There's a larger two-tiered channel there, but there's also a shorter term channel working in here, and you can see we had the break, the new low, and then we rallied back up, had the break of the larger two-tiered channel, and ended up making a new low right into the close today. So that's the way I saw it. Generally, when it's swinging back and forth like this across the EMA, you generally can trade both sides without a lot of concern. Here it was mostly all down until after 2 o'clock. I did mark this one trade here just because I wanted to remind myself to talk about it. It's after 2 o'clock, so it really didn't matter. I normally won't take a trade, and I don't suggest taking one, but I put this on there just to remember to talk about it. So we'll talk about that area right there. It's what a reversal pattern kind of does, and I wanted to show that. If it had been, over this time of day, I would have said take it just like you want to take this one here. So. But anyway, let's back out and talk about the trades. And there's some other trades in here, but these were the ones that are fairly high probability that I think you want to wait on. There were a good many in the morning, and I didn't mark much from about 10 to noon or so. And it's because we got up in here and there just wasn't. I mean, this is really kind of flat here. Price is not doing much. There's some possible trades in here, but I just didn't mark any of them because I think you're better off. You don't want to go long into this, and then you don't want to go short into here, but you got to be careful going long up here without a really good setup. So, and another thing that you'll notice, a lot of these bars are huge. There's no way to get in a lot of these with a 2-point rule. So you've either got to go with a larger stop and a larger target, or you have to work on some alternative ways. I guess is what word I'm searching for. You have to search for some alternative ways to get into the trade, and I'll just talk about this very first one here. We'll talk about that, and I'll tell you give you an example of what I'm talking about. So, but let's back out where we can see the price action a little better, and we'll talk about the trades. When I came in, prices were working higher. First trade I saw, generally I'll mark trades from 7 o'clock on. First trade I saw here, and it's not really a failed second entry long, but because it would have worked for a scalp, but on the bigger picture, it should have gone farther than that, and it didn't, so it's like a failed second entry long. We already had the break, and we were trying to get to a new high, and when we couldn't get it here, I like this for a trap to the short side. It didn't turn out to be much of a trap, but what I really liked was this bar. And what I wouldn't go short below the big green bar. The signal bar is really the big red bar. It broke higher first. Let me move this out of the way. And then turned and went straight out the other side. And that's what traps do. So I would have waited on this to break lower. You could have just put a stop there if you wanted to, but this is such a big bar. I would have waited on it to break lower, and then I would have dropped a limit order a couple of ticks back here to get a better entry. And if you do that, then this is a great, quick, easy scalp. That's all you got out of it, but it works easily, and you can get in it within the rule. But sometimes you get left out on trades like that because they take off really fast. So, um, and if you went for much more than, well, let's just see how many points this was. If you entered on a stop, your entry would have been basically 72, 75. And this one all the way down to 69. So you could have easily gotten 3 points out of that. But you don't want to go for too much more, because really the way most of this stuff is designed is for 4-tick scalps. But when it gets real volatile like this, you often can, it's so much easier to get a lot more. But you got to be careful, because you don't want to go for so much that you get greedy and you get yourself stopped out when you could have had 3 or 4 points, and you try to go for 3.5 or 4.5 or maybe 5, and then you get stopped out on what should have been a good trade. So you may have to manage your stops a little bit different too. In order to get all of this move here, you may have to say, once it moves 3 points, I'm going to move my safety stop to a point just in case it backs up, to make sure I get my point. But then if it does keep going like this one did, you still can get more of the move. So you just got to get a little bit more creative. You can't go changing the rules though, because I'll get people that'll do that, and then they'll wonder why perfectly good trades are failing. When they really didn't fail, they just didn't manage their stop properly. They moved their stop too quick, or they got it too close. They didn't put it where it was supposed to be. And, you get into all that stuff. So I'm leery of talking about all that. But, in times like this, you got to think outside the box. So anyway, there was an easy scalp right there on that trap. When it breaks higher right there above that bullish bar, and it instantly turns right there, where that it's tried to go higher than that twice now. It's basically a failed second entry long, and generally you're going to catch people off guard there, and it's going to go the other way. Then it comes back and tests it again. There's actually kind of a repeat, somewhat of a repeat pattern here. It's very similar. It's got this big bearish bar. If you saw this big bearish bar and you could get your stop in there, you could take that one. I really should have it circled. But I tried to get in it with a stop, and it went on without me. And by the time it bounced, I wasn't, it was coming off these lows here, the midpoint. This is really looking like a range now, and this is looking like the midpoint. And you don't want to be getting short, too close to these lows. And so I didn't like it coming back until it turned back down on that second entry. And that really confirmed that short-term trend line. So I'd rather exit, take my money and exit, and get back in here. And again, it's a little bit close right here. But that trap, that failed second entry long, people trying to get long off that, they're going to have to exit. And that's what runs it a little bit lower right there. And so this was a nice short. And of course, you got this trend line working down. You finally get your break here, and you get a second entry short right here. Again, I wouldn't treat this as a signal bar. This is it. And again, I would not use a stop right there, even though a second entry this is more like a breakout pullback short second entry. So it gives it a lot more credence than just going on a breakout pullback short. But I would have probably, or I recommend, I wouldn't say I do recommend that you would use a limit order here and try to get in maybe right at the lows, or maybe a tick back in. You probably wouldn't have got filled a tick back in, but you could have got filled right at the lows. And that gives you enough room to get out before here with a scalp, and definitely before here. And like I said, manage your runner a little differently. And once it starts going lower like this, where do you figure it's going? You probably figure it's going to test these last lows. And originally I had it right here, and you see it bounce just a little bit earlier. But when it bounced there, I tightened it up a little bit. So, and notice this reversal type pattern here. We got the break, a big move down to a new low. Where does it bounce? Right where the previous lows were. And notice how you're getting a little resistance there, but it can't go lower. It's still trying to fight to get through. It finally gets through, pulls back, and you don't want to go short right there. All that overlap, that's congestion. That's a little trading range. Of course, that's a failed break out the upper side, so it's tempting to go short right there. But knowing that this looks like a range and we're coming off the very lows of the day, you better just sit tight. I wouldn't go short right there. And when it bounces right here off that trend line, that confirms the trend line, but it's also a failed second entry short. And I like going long right there. It took it a few minutes to get going, but when it pulled back again and tested it again, I liked going long again. And let me show you this. This is like a little breakout. Notice the little matching highs. It breaks higher, pulls back, and tests it, and then goes higher again. That's like a little breakout pullback long. So I like that one. I would have liked it even better if it would have broke lower here, but here's where your trap was, right here to the downside, and that really confirmed it. So it took off right there, but when it pulls back here again, that's like a double test of that, so I liked it even better then. And really, you could have, your entry really, you could have entered when it broke above this one and dropped you a limit order and when it pulled back. But I liked it testing that line again with that bar right there, like a little breakout pullback long. And of course, you figure it's probably headed to the other side, and it does. And really, it was even tempting entering here, but the reason you can't enter right here, there's enough room to get out before it goes to here. But the problem is, you've got this upper trend line, and you've overshot it now, and you're bouncing right into it. There's just too big a chance that it's going to pull back before it goes up. And even though it worked this time, you'll see it fail 9 times out of 10. It's just not a good setup, and that's what, make sure you hear that. Even though it worked, don't go trying to figure out why it worked or why you should have taken it or how you could have gotten in that trade, because it's not a good trade. And I want to make sure people understand that, because sometimes I can't get that to sink in. But just because it worked doesn't mean it was a good setup. And so that's where people have to be able to distinguish sometimes why you don't take a trade. You know, I'll get a bunch of people say, why didn't you enter here? And because it's not a good setup, and most of the time it'll fail on you. And you know, because it worked this time, and you study it, and you know, the next 10 times you take it, it'll fail on you. And you'll be trying to make a losing setup work for you, and wondering why it's not working because it worked one other time. So just keep that in mind. I hope that made sense. So, and of course, we overshot it here, and a lot of times when you get an overshoot, especially on a range day, we can't break through that range. Again, it was tempting to go short right there, knowing there's enough room back to the EMA, but you better be careful, because it might do it just like it did here. It did come back to the EMA, but it ended up going higher. So, but you get this little trend line working down, you get your first break of it, and you figure we're going to come back to this midline at least, especially with that big bearish bar. But there's a chance we may come all the way back down here. So I like that one for a short. Counting your second entry off the top, and a measured move puts you right to here, basically. And so you got plenty of room to get out there. And again, you're hoping that it comes all the way down here. But you got your break so early, you know, it's not a good sign. And there is a failed second entry long right there, and it would have worked for a short. I guess I should mark it green, but I wouldn't be taking that trade unless you're trying to be super aggressive. But I will go ahead and mark it green, because there's some people that are going to want to take that just simply because it's, notice the new high, pull back first entry, then you get a measured move down in the second entry long. When that doesn't work, you're probably going to have people trapped. And there was just enough there to get you a nice scalp, and then it bounces. So, and then again, I didn't mark much in here because you don't really want to go short in here yet, because there's no, you know, there's no break of this trend line working up, but you don't want to get long right into that resistance. You might have treated this like a breakout pullback long, but we really didn't get higher yet. And it did go lower and then turn and go out the upper side, but it's just dangerous going long right there at the high. Notice how nothing's gotten above there yet. So there's too big a chance it breaks a tick or two higher and turns down. In this case, I'm guessing they caught a lot of people short off of that bar right there. But I don't see any reason to go short there yet either because the new high is not quite in place. And that's what happened. You can tell they trapped some people there. But it doesn't go very far. It went more than you would expect it would go. But just as you would expect, just as our rules tell us, it ends up failing and working back into the range again. And things really got flat here, and that's another reason why I didn't like going long in here. This is just kind of a choppy midday kind of pre-lunch kind of deal. And but when we confirmed, notice you draw that trend line off those first two swings, and you get a failed second entry long here, so that confirms the trend line. It's a failed second entry long. It's really kind of a failed third attempt to go long, but it's just basically that's congestion there, and it breaks out and fails and heads down. And so I like that for a second entry short, a confirmation of the trend line, the third touch, a failed entry to the long side, knowing that it's probably going to end up being a failed break out of this bigger trading range on this move up right here. So a lot of reasons to go long there. And then it tries to go higher once again. And notice that's a new high right there. And you could treat that like one attempt to go higher, second attempt. So it's like another failed second entry long. And this is where the downtrend really started right here. And this one takes off. There's a breakout pullback long right there, but we weren't back to this line I had here. Even if you drew it a little steeper, it didn't quite get back to it, which originally I had it a little bit steeper. But when it turned down again right here, I changed that a little bit, and it ended up fitting down here later. But this is a nice second entry short. Notice that new low, pull back first entry, pull back second entry. Look how bearish that bar is. It's like a retest of the previous resistance across here that had now been kind of trying to act as support. And so that's a great place to look for it to turn down. And this turned out to be one of the better trades today. And then you get another second entry here. It's the first real break of this trend line. And it's right here around the midpoint where you expect to get a little support and resistance for a moment. I would definitely try to use a limit order here. You could use a stop. It's a fairly bearish bar, but it didn't quite close on its low. There's a couple of ticks in there, but it closed in its lower 2/3 to at least half. I would definitely probably try to use a limit order here, but you could use a stop. It's close enough. You're going to get a retest of this low. We're probably going all the way to the other low. We still didn't quite get there when you back out and look at it. You can see we didn't get there, but that's pretty close. That's where the original rally started. And a lot of times you'll come back, you'll get a big bounce at that original place because not everybody got long, got filled there, and there's still orders waiting around. And you see we got a bounce here. Plus, it's the bounce right off the lower trend line. It was easy to draw this line and drag it right down to those lows and say, hey, that's probably where we're going to bounce. If it doesn't bounce there, I'd drag it down to the next lows. And eventually you're going to get a bounce. But guess what? It bounces off that one right there. And these others up here turn out to be a perfect midline down through here. And you can see it acting as support and resistance all the way down. And that got you into the 2 o'clock hour. But I did circle this one because I wanted to talk about it. And let me show you this. We came off the lows. We got the shorter term channel in here, and you can see it. And we got the break and new low. So that, and look what happened after you got the break. You got the new low. It bounced right off the lower of the trend line. This is obvious. This is a good two-tiered channel. Well, what happens when you come off the low side? Well, you're probably going to the high side now. That's generally what happens. Sometimes it may go a little lower, but it won't go much, and it generally reverses and heads to the other side. And that's standard, common kind of price action knowledge there that you should understand that. If you don't, make sure you understand that. So you're looking for prices to probably go up here anyway. But look what happens right here off this bounce off this low. And it's really tempting to go long right here. And you really could, if you wanted to be real aggressive. So I could circle that one in green. Look how far away it is from the EMA. We're way overdue to snap back. But here's what I really wanted to show you out of this. I will go ahead and mark it green. It's before the 2 o'clock hour. But look what happens when it bounces. It doesn't find any resistance really at the EMA. It gets through. It tries to come back because there's going to be a lot of selling right around there. But it can't even close back through. And then it rushes higher. And then it pulls back. It makes a higher low. And it comes up. And then so you don't want to be going short right here, because all the signs of a possible trap or reversal. Look at that signal bar right there as well. That's a bullish signal bar. You can't go short right there. Now, if you get a break below this one, maybe you consider dropping a limit order. But after seeing this come from this low and go straight through the EMA and go that strongly higher without hardly any resistance there, I'm not going to take a short over here, period. Even if it's going to go 10 points lower with me, I'm not going to take one, because this is where traps come. The signs are all there. That's what a reversal looks like. So sit tight. You might miss a good trade, but that's what good traders do. They don't gamble. And if you went short here, you're going to be gambling, especially with that signal bar. I mean, that's, it's not a hugely bullish bar, but it's definitely not a bearish bar. It's got a lot of green in it. Even though it has a lot of stem, it still closed fairly high there. So just sit tight. And when this thing turns down here and fails and turns up, that's generally going to be a super trap. And then when the next second entry comes and it's above the EMA, you're probably going to take it too. Now, this is a little bit different up here because we have come off the high now, so you'd have to reconsider that one. If there's a trend line or something working up through there, yeah, maybe you go ahead and take that one, figuring you're going to test that line at least once more, or you might even get your break. But this one, this is what reversals look like. So, and notice this too, your last swing, look where those swings, even though those are not making pushes above, those are the last attempts to go higher, and the market couldn't even get above those areas. And look how this one shoots past all of those. And the first swing lower is all the way up here where the original high was almost. So that's what you need to notice. And that's what reversals do. Just like up here, notice how, notice what happens here. Notice how these lows are all higher and higher, and then suddenly you get a lower low and then a lower high and a lower low. Now you're swinging the other way. You're making lower lows and lower highs. And same thing coming down. You've been making lower highs all the way down, and suddenly you make a little higher high, but that's just two swings. So, it's not going to be the end of it, but that's your first clue that, hey, this may be the last push down or so, and then it comes back. And even though it doesn't really push through strongly, it's not going lower. You never get a break below a bearish bar or anything. And then when you get that trap, boom, go long. But this one is even better than that other one. So I hope that makes sense. I like to show those because we don't probably talk about them enough. I've been trying to show those in the last few videos. But that was really it for today. Things are trying to get back to normal. Again, some of these bars are very large. So, just like this one and this one, you got to kind of think outside the box in order to get in without breaking the rules. When I say think out of the box, make sure you understand that. You don't monkey with the rules themselves. You just have to think differently about how to get in and still meet the rules, still get in within the parameters that we set. So I hope you understand the difference between the two. So a lot of times I'm hesitant to talk about that in these videos because you get people come in, they've only seen a few of these videos, and they think, well, you said in the video to do this. Well, but if you understand and you saw the last 600 videos, you'd know that, hey, no, I didn't mean to do that. But I can see where people can get confused because that's not normally what we do. And so I want to point that out and make sure you understand that that's not normally what we do. And I'm not telling you to change the rules or the rules have changed or anything like that. And one other thing I want to say, I've been getting a lot of questions lately about the 2000 tick or the 6500 volume. Um, they're exactly the same. There's not much difference in them. The reason we used to teach the 2000 tick and changed is because the CME changed the way the ticks were counted. So it messed up our 2000 tick chart. In the meantime, it's my understanding that's been fixed, but there's not enough difference between the 6500 volume to go back to it. It doesn't, why keep switching back and forth? They're basically the same charts now. So I just stuck with the 6500 volume. But if you want to go to the 2000 tick, you like it better, or you felt more comfortable with it, use it. It doesn't really matter. They're both the same, so you can use either one of them. Hope that makes sense. So I'm going to wrap it up for today. We're about 30 minutes into it. We'll be back again to do it tomorrow. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.